Hey, what's up, y'all? Crypto Glenn back here with another video, doubling up on the videos for you guys today. And I wanted to do this video because I find myself going back to a lot of these investor conferences. And if any of you guys have been following this channel for any elongated period of time, you know that I love covering these kinds of conferences just because in this room, you know, they're always packed with thought-provoking perspectives. And not only that, but the people who are normally in this room are the people who write policy to some degree or another for countries, for companies, or for governments of sort. So it's really no different than this conference here, the Future Investment Initiative that was in 2019 in Saudi Arabia. It was a 2 or maybe 3 day event. I found myself just kind of really spending a lot of time watching the telecast that they had because I knew if we were talking about the future investments of the world, I had a feeling that at some point they would have to be talking about cryptocurrency. And so I found myself going back to this conference just because now that we've come so far, I believe there's even more clues to be had from something that's happened in the past, if that makes sense. So on the stage here, there are a couple of people that I think people should know of, really. The two main players on this stage really are one, Ray Dalio, that can be seen here, and John Waldron, the gentleman here on the right. Now, John is a CEO to Goldman Sachs. And if anyone here watching the channel pays any attention to anything investment related, you know Ray Dalio is the head honcho over at Bridgewater, and the man has a net worth of over, last I checked, I think he's at $16 billion. So he's got a really interesting, John Dalio, he's got a really interesting video called How the Economic Machine Works. I think that's something that everyone should watch. I think it lends very, very great perspective into what it is that, you know, we may be facing now in world markets. And I think that just kind of, it can help you become a more savvy investor in terms of just understanding how things work on a macro perspective. So what I want to do here is I want to play this video and I want you guys to listen to what John Waldron says here about some of the things that, you know, we're currently going through right now and how government views certain technologies of tomorrow.
Really well, and challengers will do well as also.
John, but is there a danger of complacency here?
Before I finish this, I should let you guys know, and I apologize, that this is super important because a lot of these people that are in this room, even a lot of people that you can't see in this frame, they represent sovereign wealth funds of many different countries. And a sovereign wealth fund, sovereign wealth fund, try saying that 3 times fast, is really an investment fund or social wealth fund that's state owned. Again, it's owned by a country. It's a state owned investment fund that invests in real and financial assets such as stocks, bonds, real estate, precious metals, things of that nature. And a lot of the individuals who are in this room, they are the directional heads for these sovereign wealth funds, meaning that, you know, they pick and choose where the money from these countries is going to be invested. And it's important to know that most, if not all, sovereign wealth funds are actually tax-free. They're tax-free havens.
Given what Ray has put on the agenda about a social revolution, the challenge of capitalism, the climate emergency, 10 years is almost too long to be considering this. We need, as I said in my introduction, to be thinking probably far more front-end loaded on the scale of what is happening.
Unfortunately, when you run a public company, you don't have the luxury of 10 years, so it may be too long for those of us in public structures. But I would just add, I agree with what Ray and Steve said. To me, the ineffectiveness of the fiscal side, whether it's from a policy standpoint or governments and their ability to react to the change and deal with the change. You kind of look at the stable coin, digital currency developments, and, you know, governments kind of scrambling to catch up to innovation in the payments area that Facebook is bringing to light. Whether you think Facebook has the good or a bad solution, you know, put that on the side. There is a problem to be addressed in the friction around payments, particularly internationally in the world. It's a problem. It's an issue in the world that needs to be dealt with. And The question is, can governments react to these, these sorts of private sector ideas? Because the innovation, I think, is moving faster than the fiscal side, has the ability to catch up. So I worry about that, and you couple that with the fact that a lot of the innovation is driving at disparity. It's
interesting what he said there. He worries if governments can keep up with what private sector is developing because they know. And again, this is a very high level individual. This is someone who, sees world investments on a macro scale, and he is concerned and understands that there is a problem with, cross-border payments. Why am I showing you this? I'm telling you this because I want there to be no question in anyone's mind how some of us have been led astray to think that this coming of age of digital assets and cryptocurrency, how they once tried to make it seem like it wasn't anything, turns out that it's a very big thing. I want everyone to know exactly just how big this space is going to be. Now, you all know who this gentleman is here. This is our good friend, Stephen Mnuchin. Yeah. We all know what Stephen Mnuchin's been up to. Him and Brian Brooks. For those of you that are looking at XRP, these guys have been custodians, shepherds in helping usher in this new digital age. Just two guys just doing their job. I want everybody to pay attention to this gentleman here as he outlines the challenges for sovereign wealth funds. Now, keep in mind, sovereign wealth funds are often, some of these funds are billions, if not trillions of dollars. Now, I want you to listen here while this gentleman outlines the unique challenge that a lot of these sovereign wealth funds are facing.
The world is experiencing a great transformation on many fronts. These structural changes in the global economy will necessitate a change in how investment strategies are devised and applied. Low growth environment with interest rates staying lower for longer than anyone thought it might be makes capital allocations a real issue for investors. But most investors try to time the cycle, whereas strategic investors are in it for the next 20 or 30 years. Here steps in the sovereign wealth funds with their massive firepower of patient capital, moving away from fixed income, lured into the world of illiquid alternative investments in their quest for higher yields. They are ditching listed companies in public markets where liquidity has been dwindling for the promised handsome returns of venture capital and private equity. Where long-term investing offers sovereign wealth funds the ability to diversify into illiquid assets and earn the additional premium for doing so.
So let's go back and think about what he just asked. Why are sovereign wealth funds leaving the public markets? Public markets like the Dow Jones, the Japanese stock markets, the foreign exchange stock markets. Why are sovereign wealth funds leaving these traditional investment pools, if you will, that they have normally dominated? And the answer to that question is because today we are in a renaissance where more and more retail investors are getting into traditional markets via M1 Finance, Robinhood, Webull. And when you have more of the little guy getting into these investment vehicles, if you have enough people getting in, it drastically changes the landscape of investing. We saw that here where a lot of the big guys on Wall Street couldn't understand why Hertz, even though they were facing bankruptcy, price was surging. Well, you had a lot of, for all intents and purposes, uneducated new investors entering the market, buying what they thought was a good deal. Now, as this continues to mature, essentially what you have happen is more people in the stock market betting on the same thing that the big guys are investing in leaves less and less returns for everyone to have. For illustration purposes, if you take $100 and you split it amongst 14 friends, everyone walks away with a smaller share, versus if you take that same $100 and you split it amongst 5 friends, right? The more people there are in the market, the less gains there are to be had. The reports are coming out that market returns in the stock market are actually going to be lower here in the future versus in the past. At any one point in time, the stock market may have given you back anywhere from 8 to 10%. Reports are coming out that those are actually going to be more along the lines of 7.5%, 7.25%. Now, this is extremely, I'll say, interesting, and I don't mean interesting in a good way, because as those returns begin to diminish, this means that the return that assets are going to give back are going to be lesser, which means that we're probably looking at an overvaluation of assets in the market that we're seeing now. As we see here, taking a look at some of the key points of the article, market returns on stocks, bonds over the next decade are expected to fall short of historical averages. The main factor behind this, valuations are overly high. Inflation is a huge factor. Historically low rates in equity markets is going to be a factor. Internal or international stock appears to be more attractive than U.S. stocks based on valuations. Again, if you just read the research, a lot of people are saying that, especially for tech stocks, the valuations in the U.S. market are too high. And historically speaking, the U.S. market has been in a very attractive place for investments from all across the world. So in this article that was brought to us by Schwab, you see here the explanation for wanting to understand why long-term investments why long-term investment estimates of returns is important, And it basically just goes on to say that a sound financial plan serves as a roadmap for many investors to reach long-term financial goals, and saying that if the investor needs reasonable expectations for long-term market returns, if return expectations are too optimistic, it could mislead investors and their expectation of what investments could do, allowing for those investments to not have the returns that they're expecting. Now, this is important for a few different reasons. As we're facing inflation, most people make investments as a hedge against inflation, right? So if you're not invested in the proper assets, you may think, okay, well, if inflation is going to be 2-3% a year, my investment should get me, again, at least 4 to 5, and I'm one step ahead of inflation, meaning that my money is still growing. But if the valuation for those assets is too high and you don't actually end up making that 4 to 5 or more percents, then you could still run the very real risk of falling susceptible to inflation. And that's a very real problem that's going to end up on our doorstep here. Okay. But when actual returns don't match the expectations, it could lead to a delayed investment for people or retirement for people in the working field, or it could even lead to a difficulty in paying for big expenses. All right. So again, why is that important? You got all these guys, all these big important people, these guys and these gals in this room trying to figure out where can they put their piles of huge, vast amounts of money and resources. Where can they put it to get more return? Because they can't put it in the stock market. They can't put it in real estate because all those valuations on those assets are too high. They're topping out. They're maxing out. But they still want to be able to have a premium on the returns. Where can they go? We see it. Sovereign wealth funds increasing allocations into alternatives. You see the headlines. You're reading the stories. You should be. They've got the same players in the room that we've been looking at for the better half of the last 2-3 years. Wherever they decide to put their money, they're trying to beat the average retail investor so that they can get the gains and the average retail investor can't. Where are they going? If you're like me, you know where they're going. 10 months ago, I did a video covering the Future Initiative Investment Conference when it was first being held. They sit around in these rooms where they discuss these big ideas and where can they put their money. And here you're going to see chairman of or member of the board of directors, chairman of the audit and supervisory committee for MUFG Bank in Japan. Now, you know, this is one of the biggest, if not the biggest bank in Japan, and they have direct ties to Ripple. And I'll show you this again. What is he going to tell these people?
But this is a future investment initiative, right? We would like to talk about the future. So I would like to add the two considerations to the necessary matter for the future financial institution market. The one is
He's saying, so if we're talking about the future, and we have to think about where the future is going, let me tell you three things where I think this thing is headed.
Growth potentiality in the regional economy. And the people invest money in where they can make more money. So,
and we did not just see that in the last segment. Sovereign wealth funds, they want to put their money where they can make the most amount of return, because where they have been investing it thus far, it is reaching a red line. It's maxing out. There's only so many gains to be had where they have been putting their money before, so they're looking for new places to put money.
In ASEAN and India, the working age population growing more until 2050. Mm-hmm. And on the other hand, right now in India, the so-called third Silicon Valley, following the USA and China.
Now, I know it's kind of hard for you to understand, but what he's basically saying is Saudi Arabia and India have the youngest demographic of working professionals. I think in Saudi Arabia, 50% of the total demographic is 25 and under. In India, I think it's closely related to that. Also, what he is saying is India is the third Silicon Valley next to China and California.
And due to the summer trade war between the U.S. and China, the people tend to think about some sort of getting back to the regional economic zone. I mean, the international financial center may shift from globalization to localization. The other point is introduction of the cryptocurrency. And as you may be aware, it's
you see that's important?
Oh yeah. Libra, the Facebook already decided to announce to postpone of their launch of second time, right? Mm-hmm. A couple of times. So, and the very strong compliance and regulatory concern over there, right? But in mid-term and long-term, mm-hmm. There some innovation by introducing of the cryptocurrency may not be avoided in the global market.
You heard what he said. This introduction of cryptocurrency is not going to be avoidable in the global markets. Now, I know a lot of you guys are sitting back like, dang, Crypto Glenn, where are you going with this? Now, listen, I understand I've gone the long way around about this, but I needed to paint you the picture. You, me, your friend, your brother, your sister, your parent, whoever you talk to about this, that had decided to take this journey with you, you have been right this whole time. You've been right all along. Don't trip where the prices are at. Just buy more. Why? Because while they have been telling you it's junk, it's rat poison, they have been buying. When they FUD the markets, they are buying. World's largest sovereign wealth fund indirectly holds almost 600 Bitcoin. We know what JP Morgan has said about cryptocurrency and Bitcoin. We know what Warren Buffett has said about cryptocurrency and Bitcoin. You think these guys who don't hold, maybe Warren Buffett with him being worth, 50 billion, but for the most part only hold, if they hold, a fraction of the total value of a sovereign wealth fund, have been doing the exact opposite of what sovereign wealth funds have been doing? No, they are buying crypto. And some of us are getting shook out the market when we see red because we're scared. Who does this look like to you? Because it kind of looks like Steven Mnuchin to me. It could be a little bit of a stretch, but from right here, it looks like Steven Mnuchin. Norwegian government pension fund, also known as the oil fund, has over 1 trillion in assets, including 1.4% of all global stock shares. It is considered the world's largest sovereign wealth fund. This whole entire video I've been telling you about the sovereign wealth funds, what they are, what they do, why they do what they do. According to Archon Research, reported on September 19th, the fund also owns almost 600 Bitcoins through its investment holdings. Archon Research analyst shows data that the Norwegian oil fund has 577.6 BTC through its investments in a business intelligence firm, MicroStrategy. This puts the company's portfolio at around $6.3 million. They hold $6.3 million in Bitcoin alone. What do you think is going to happen to that fund during the next bull cycle? It's going to go through the roof. And not we, but some people in the crypto, they can't see where it's going. I just showed you a clip of the COO of Goldman Sachs, who just told you that we understand border remittance payments are an issue, and I fear that governments won't be able to keep up with the innovation that comes from the private sector. When we know directly of a private sector company that has been trying to work in concert with the government so that they don't have to have this uncomfortable feeling. And we're tripping about 23 cents. We're becoming tribal, that my coin is better than your coin, and the big boys, they're just buying it up by the boatload. There are going to be multiple winners in this race. Just stack. Just stack. That's all I want for you. Don't become tribal. Don't buy the hypey new coin of the week. Just stack. Just keep buying. This is what we're worried about. 23.3 cents. Price is still under the value area. May break down to the, down a little bit more. 22. I think we're close to the bottom, but if it goes to 22, who cares? Buy more. Wasn't this the shiny coin of the week last week? Uniswap? This activity here, this made crypto very exciting. Very exciting for the little while. Ran all the way up to, it touched what, 14? Maybe went past 14? What did we touch? Yeah, it touched just under 15. Hovered at 8 to 10 for a while, and then is at what it was when it was given away by Uniswap. And everybody took their eye off the ball. Look, some of you guys made money, yes. But for the most part, everybody's chased this because we're like, oh, we gotta get into the new thing. This is where the money's at. No. That's where the money's at. The blue chips are where the money is at. This is why sovereign wealth funds, the funds that have dominated investing for I don't know how long, are now looking at the place that you and I have been in since prior to 2017. Some of us got in at 2017. Some of us have been in before 2017. Don't act brand new. You know where this thing is going. Don't freak out. Just buy. And I promise you, you are going to look up in 5 to 10 years. This digital decade is going to mint so many new millionaires and billionaires. And you are going to look up one day and you will be solely responsible for changing your family tree, solely responsible for changing your family's financial situation. because you saw somebody, and that goes double for the people who have tried to tell the people that they love and the people that they care about what's coming, and they look at you like the guy from the disaster movies and they don't believe you. When your grandkids ask you, Dad, what did you do? Or Granddaddy, Grandma, what did you do? Or some of you that are going to have kids real early because you won't have to worry about how you're going to pay for them. Great granddaddy, great grandma, what did you do during the greatest wealth transfer? Some of you are going to say, I bought more Bitcoin. Some of you are going to say, I bought more XRP. Some of you are going to say, I bought more Ethereum. And because your kid's going to be able to have this bravado about them, they'll probably be cussing at an early age. The respond might just be bleeping legend, because that's what you're going to be, a bleeping legend. From from your child's generation on down the line, everyone is going to have a picture of you in their house, and you're going to be known as the individual who drastically changed the family tree financially, because you were a visionary. This isn't hype. This isn't hyperbole. This is factual. This digital decade, I don't know where we're going. I don't know if it's going to be Liechtenstein. I don't know if it's going to be Monaco. I don't know if it's going to be the Amalfi Coast. But when this thing finally kicks off, somebody tell me where we're going and I'll meet you there. You just listen for this voice. I'll be there. Giving out high fives, margaritas, daiquiris, and whatever else it is that you're drinking. You were right this whole entire time. Now, the only thing you have to do is make sure you secure your own digital assets. You continue to share the information with people that you care about. Don't force them to drink from the watering hole. Just tell them. That's your job. Just tell them. Tell them what you're going to tell them. Tell them what you told them. Because once this thing goes off, your job in solely just telling them is because nobody gets to say, nobody told me, nobody warned me, no one said anything to me. You tell them Crypto Glenn is putting you on notice. This is it. This is it. Stock market overvalued, trading over 25 times future price earnings. Inflation right around the corner. Hyperinflation could follow shortly thereafter that. Everyone who is paying attention is looking at crypto to figure out, what do we do next? This is the play. Why? Because no one is looking. The market, value investing is nothing more than a foot race. He or she who gets there first before the herd wins. We're at a measly, mimily-bimily 333, what is that, billion? Market cap, 36 million, 100 million, yeah. 333 billion. That's it. At our zenith in 2017, what were we, $500 billion, just over $500 billion? You have all seen the illustrations of all the world's money. I don't need to pull that up. This is so infinitesimally small. And all you got to do is just keep buying. That's what I'm doing. I'm buying. I did a video where I said, oh gosh, I got to start buying more digital assets. Then what happened? I woke up Monday and the universe gave me a gift. Some projects down by 5 and 6%. Yep, that's a buy. Yep. That's definitely a buy, because I know what's coming. I've been here with y'all since 2017, just waiting. You ain't gonna shake me out of this market. Bitcoin goes down to $1,000. I hear what some people are saying. Let me tell you something. I'm not that lucky. Okay? I'll wake up tomorrow and Bitcoin's at $1,000. Crypto Glenn's going shopping. I'll wake up and XRP's at 18 cents again. Back up the dump truck. Let Ethereum go to 250. Please. I want to get to that one elite club. And if you don't know what I'm talking about, go back and watch one of my previous videos where we talked about the elite clubs for cryptocurrency, where you have to have so many to be a part of the club. I want to be a part of that club. I want to be a part of the Bitcoin 25 million club, 1 million club. I want to be in the top 0.1, 0.5% of XRP holders. You know why? Because I want to give my kids an unfair advantage. I don't want to retire my folks. Call them up. Hey, you don't got to go to work today. Matter of fact, you don't ever got to go to work again if you don't want to. I want to see all your listening faces in Liechtenstein or wherever else. The Amalfi Coast, the Mykonos Islands. I'm not talking about going to Texas. I can do that now. I want to see your faces somewhere abroad on some exclusive, super exotic island none of us have any place being, because we may not have grown up with a silver spoon in our mouth, and we don't act like the people who may have come from old money. Because people that are in the millennial age category have been through, and I know I'm ranting right now, but I don't care. Because people that have belonged to that millennial age category have been through 2 economic crises, 1 housing crisis, a pandemic, all before the age of 35 or 36. Because this one is for us. Because they kept automating the jobs, not worrying about, if we keep getting rid of the jobs, it won't matter what we have in store for people if they're too broke to buy it. This one is for us. You and I both know it's coming, and all we have to do is just wait. You know why? Because we got here first. We got here first before Wall Street. We got here first before the sovereign wealth funds. This one is for us. I'm gone. I'll see y'all in the next one. Peace.